Okay, guys, I'm going to get into the stock charts, technical analysis for the market indices to start out. And I want to point something out. I think there's a big move coming, and I want to point out what I'm seeing today that tells me that there's, possibility of a big move coming. I don't know if it's up or down, but I think everyone knows which way I think it is if you follow my channel. But here's what I see what's going on today. You can see that we've entered, we've almost filled the gap basically. Here's the gap back in February that really started the big move down. It started out with a big gap down, trapping money, and then it, sold off. And we've just about filled the gap today, falling a little bit shy, but it looks like the gap's going to fill tomorrow or possibly Friday. Probably fill tomorrow at some point. But look at the volume that we're getting today. Look at the volume right here. This is the important thing. The trading day is just about over, and you've got just no volume. I mean, this might be the lowest volume of the year. If I look back here, you can see we haven't had this low of volume. The last time we had this low of volume was right up here at the market top in February, right before the big sell-off. And you can see, look at the volume. This is low. We have an hour left, so maybe something will happen, but there's just anemic volume right now. So the last time we saw this kind of volume in the SPY, we were right up in this range right here. So, and it was just grinding around, not moving up, not moving down, just kind of basing out. And that's what we're seeing right now. We're seeing the prices are not really moving up, not moving down. I mean, yeah, slightly up, I guess, if you want to look at that. Yes, slightly up, but just marginally. So that is interesting. I see, and that the point that I'm trying to make is we entered the gap and we're running up to fill the gap on just no volume, just declining volume, the worst volume that we've seen all year, really since February. So yesterday I noticed that the volume was about where it was on February. It really closed with about the same volume as it did on February 19th this year, and that was right here. And really the market didn't go up. It didn't go any higher than that February 19th mark. That was really the high, and then we saw the 36% plunge in the market. And I don't know if it plunged 36% in the SPY. Let me see here. I forget. Yeah, it was about 36%. And so the volume is the same kind of volume. We're really, it looks like we've topped out. We're running on fumes. There's nobody left to buy. But there's a big jobs number coming out on Friday. The market probably is just going to hold up here until that number, and then they're going to use that number to make the move that I'm talking about. So I don't know if that's, and the number comes out on Friday before the market opens. So Friday you're either going to wake up probably to a big gap up or a big gap down. I don't know which one. Probability tells me it's going to be a gap down, and I say that because of the negative divergences we have. We've got fading momentum, and we're seeing it in the price action. We're seeing it in the volume. There's fading volume. We're moving up on declining volume. Look at this volume drop off over the last couple days, just completely dropping off, and price is going higher, diverging. So if you just follow price, then you see a positive trend. But if you're looking at other things besides price, like volume, declining volume, think about the rate of change. Not so much that it's really low volume, but the fact that it's declining volume. That's something that is important, the delta on volume. And yeah, the market can grind higher. If you go back here in 2019, the market was grinding higher, moving higher on low volume. It did it, for the fourth quarter of 2019. So maybe that's what we're going into. Maybe we're going to go into this, slow grind higher, but to me, if you look at it, the market was grinding higher. It broke out of a holding pattern right here and started to grind higher. It doesn't seem like we've broken out of a holding pattern. It seems really like we've just sprung right off the bottom, 48% basically. And it just doesn't seem like we're going to grind, continue going higher. But again, the jobs number on Friday is most likely what's going to trigger the next move. Could be up, could be down. I'm going to bet that it's down with the negative divergences. You didn't have negative divergence back here as the market was grinding higher, at least not initially. You didn't have it. You can see here we made a low, and then as we moved higher right here, we made a higher high on the RSI and the PPO. So, well, the PPO was about flat, but it made a higher high on the RSI. So this move down here, the RSI was down lower, and then we moved higher on increasing momentum, I guess, shown in the RSI. Here, right here, we've got decreasing momentum, and you really can see it clearly. The RSI, you've got decreasing momentum there. You've got a larger decreasing momentum on the RSI. So it's a divergent. If I delete that, this is just pointing out kind of the most recent divergence, and we're moving higher. So it's different than before. So that's really the point that I want to make is we're moving higher on just no volume. And this might end up being the lowest volume of the year today. And that's not what you want to see with a strong bull trend. You want to see good solid volume. It doesn't have to be breakout volume, but we are breaking into, we broke into this gap. So you would expect when you're breaking into a gap to see breakout volume confirming the move. This move here is just grinding volume, filling the gap. It's not confirming the move is all I'm saying. Doesn't mean that it can't continue. Doesn't mean that it, will or will not continue. We don't have any other sell signals to market off of or track off of. There's no, we don't have like the cues. If I flip over to here and look at the daily, I don't have any, this was your bearish engulfing and it was taken out. This volume right here, this really light volume of this moving higher took out the bearish engulfing candle. So there's no candlestick to trade off of. There's no breakdown in trend. All there is continuing move higher on lower and lower volume. So take that and do with it what you will. Oh, and since we're looking at the cues, just look at the volume. Now the day's not over. We got another hour left, but you can see that this volume today, we haven't been this low through this entire rally move here. And the last time we were this low was right there, basically, on February 19th, which was the high of the move, and then we had a big sell-off. Doesn't mean that's going to play out again. It's just something to pay attention to when you see volume dropping off like this, and prices moving higher. Let's look at gold here because gold has been, pretty hot recently. So here's what I see in gold, and I'm looking at gold bullion. Here's an hourly chart. We got this topping stick right here. This is a shooting star doji, and it's got the tail's longer than the head right here. So it is a reversal, and the next candle didn't confirm, but it also didn't deny it. And then the following, the next candle was, since it basically closed right even with the following candle, just kind of throw that out. Look at the next candle, and that was a nice confirming candle. So this could be a short-term topping area for gold. We are getting a little kickback here, but gold might want to sell off and come back down to, maybe below. It could easily undercut this whole wedge pattern that I have here. So I'm going to watch it, and if it plays out or starts to play out, I'll point it out. For now, I just wanted to point this out. This is just an hourly chart, so there's nothing huge. I don't see a reversal candle on the daily yet, so I'll keep an eye on that, but I wanted to just point that out. Let's look at Apple here. Apple is just grinding sideways. You can see I've got this trend line right here coming up, 3 data points making this upward price channel. We undercut the price channel there, and then Apple came out with earnings and ramped higher. It was a pretty spectacular move higher. And I wasn't short this or anything. I didn't say to be short Apple, That was about a 15% move to the high. But now it's just kind of run out of steam. It's, it's not going down, but it's not moving up either. So just something to keep an eye on. It's just been kind of grinding sideways. We need to see some sort of a move in the market, I believe, before Apple does anything, but something to watch. And if it wants to, we've got two gaps to fill. We've got a gap here. So it's important to keep an eye on these gaps. This gap sitting at 425. And then we got a gap all the way down here sitting at 385, 385.50 basically. And gaps oftentimes aren't left unfilled, so we'll watch that. And we'll look at PayPal and Adobe before I wrap. So I decided to cut this one. It's, it still could easily be back testing and getting ready to reject. But the thing is that it continues to back test. So here's my trend line that I have. And you can see it back tested here, it back tested here, it back tested again today. These last few days, it's just been back testing, continuing to move higher. It's just getting a little bit beyond my threshold for what I want to for acceptable losses. So I need to go ahead and reduce some risk there. And so I went ahead and pulled this one. And if you look at the daily, yes, there's declining volume, but this thing's been, pretty low volume on the way up as well. It's just been moving higher on low volume. So this one, could easily continue to move higher and continue to back test. I'm just not seeing signs of, of a reversal, basically. I'm seeing continued signs of the back test. So I decided to cut this one. Moving over to Adobe. This one still looks good. I've got this resistance line right here at 450. It's about 455.50. I'm expecting that to hold, and I'm expecting that to, any kind of back test to that trend line should hold and continue to move lower. And we're just moving up into that resistance again. We've already been there once. We're moving close to it. Will we get there today? I don't know, maybe, but we're just moving right up to it. So still looks okay. This one has not moved outside of any kind of risk parameters. If you entered this short, this is most likely where you got in on this breakdown right here. You're down 3.5% from your entry, and that's acceptable. I mean, you're not stocks aren't always going to move just instantly in your direction because you took a breakdown pattern. Sometimes they have to chop around a little bit. So again, still looks good. Now, if this starts to break above this 350 or 450, 456, and we start to get a daily close up above that, like 457.50, a daily close, above that, then I'll probably stop out of that one as well. And so we're just continuing to take opportunities or shots where the charts tell us to, and they don't always work out, but you got to continue to take them and then just manage the risk. And that's all I got for this video today. Just wanted to cover what I'm seeing on the volume. I think it's kind of interesting, and we'll review tomorrow because I think the market is setting up for the jobs report on Friday. The ADP jobs report came out today. It missed pretty big. Maybe that's forecasting a big miss on the jobs report on Friday. And that doesn't necessarily mean the market's going to sell off, because obviously the market continues to trade on stimulus hopes. But, maybe there's something that happens with the stimulus where they don't get something passed. I don't know. The chart just tells me it's setting up to make a move. And it looks like it's setting up to make a big move down. So catch you guys on the next one. Thanks.